Hello everyone. Let us see the sixth chapter of Financial Management second, that is Financial Statement Analysis. So now, what are the financial statements? There are two types of financial statement. One is profit and loss account, another one is balance sheet. So these two statements are analyzed in order to determine the financial strengths of a firm, its leverages, its capital structure, efficiency of operations, and trends over a period in the various components of financial statements. So for that purpose, these two statements are analyzed. Earlier, firm used to fail because of operational issues like in marketing, labor issues, or in production. But now, firms are failing because of improper mix in capital structure, improper mix of components in capital structure, or improper source of raising funds, maintaining a wrong inventory. So all these reasons now it lead to a failure of a firm. So that's why lenders, they used to evaluate these two statements in order to determine the share prices of an enterprise. Especially at the time of mergers and acquisition, it is very important to determine the share price of the firm. So that evaluation is done by analyzing these two statements. So profit and loss account is a statement prepared for the purpose of ascertaining a profit of a firm. So it is prepared by transferring all nominal account balances representing the incomes and expenses, then miscellaneous expenditure, and depreciation, appreciation are transferred to profit and loss account. Thereby we determine what is the profit of the firm. Similarly, balance sheet is a statement in which all the balances of real accounts and personal accounts are transferred to this statement. If they have a credit balance, if real accounts and personal accounts have a credit balance, then they are transferred to left hand side as liabilities. If the real accounts and personal accounts shows the debit balances, then they are transferred to the right hand side as assets. Techniques of financial statement analysis. It uses a tool to evaluate the performance of the company in the current year against previous year by comparing different components of financial statements. There are three types of techniques. One is comparative financial statement analysis. Comparative financial statement involves preparation of financial statements like balance sheet and profit and loss account with the amount of current year and previous year, and comparing the amount of these 2 years and is there any changes, and whether that changes is in positive or in negative, that is in rupee and also in percentage we have to calculate. So we'll see with the help of practical problems under these techniques. Here is the first problem. Following is the balance sheet of Wolverine Limited as on 31st March 2016. So balance sheet given here. Share capital of 2015 and 2016 given. Profit and loss account, debentures, creditors, then fixed assets, investment and current assets. Prepare comparative balance sheet. So here only you can observe the changes. In the year 2015, share capital was 1 lakh, and in 2016 also 1. What is the changes? There is no changes. Changes is in rupees 0 and also in percentage also 0. Profit and loss account, in 2015 it was 24,500, but in 2016 it is increased to 32,600. So what is the difference in rupees? 32,600 minus 24,500. Changes in rupees is 8,100. Similarly, we have to calculate what is in percentage. If 32,600 is 100%, 24,500 was the real amount. If it is 100%, now it is increased to 32,600. So 8,100 is a difference. So 8,100 is what percentage? So like that we have to calculate for each type of component. Debentures 20,000 earlier, now it is 30,000 increase. There is increase in liability. 7,500 creditor initially, then it is increased to 19,400. And fixed assets, it was 60,000, now it is 54,000, so reduction. 50,000 investment, again it is reduced to 40,000. Current assets 42,000 and it is increased to 88,000. Let's solve this problem. This is the format. Particulars 2015, it's a base year. 2016 current year information you have to write, and what is the changes in rupees and changes in percentage. That is changes in rupees, this amount you have to write, divided by base year. Base year, what is the amount of the component, into 100, so that you will get changes in percentage. First let us calculate the changes for liabilities, equity and liability. Under that first component, shareholders fund. And the shareholders fund, which is the first one, here it is share capital. Share capital in 2015 it is 1 lakh and 2016 also 1 lakh. So base year amount 1 lakh, current year also 1 lakh. So changes in rupees, base year minus current year, that is 0. There is no changes. And change in percentage, change is 0 and base year value is 1 lakh into 100. So any amount if you multiply to 0, you will get 0 only. So 0%. And second component of shareholders fund, it is profit and loss account. Profit and loss account in the previous year it is 24,500 and in current year it is 2016 32,600 and the difference is 8,100. So percentage in rupees, change in percentage you have to calculate. Change in rupees is 8,100. So changes is 8,100 divided by base year value is 24,500 into 100 and the percentage is 33.06%. Then second component, it is non-current liabilities. Under non-current liabilities there is only one item, that is debentures. Debentures in the previous year 20,000, in current year 30,000. So changes in rupees is 30,000 minus 20,000, it is positive changes 10,000. So changes in percentage, change is 10,000 divided by base year value is 20,000 into 100. So change in percentage is 50%. Then current liabilities. Current liabilities, under that only one item is there, that is creditors. Creditors in the previous year 7,500, base year 7,500 and in current year 19,400 and the changes is 11,900. 19,400 minus 7,500, 11,900 is the change in rupees and change in percentage. Change is 11,900 divided by base year 7,500 is a value into 100. So change in percentage is 158.67%. So total value of liabilities in the base year is 1,52,000 and in the current year 1,82,000 And changes, make a total of changes 11,900, 10,000, 8,100 and 0. So that is 30,000. So now you have to find the changes in liabilities in total. In percentage you have to calculate, in rupees already you got the difference 30,000. So in percentage 30,000 is a change in total divided by base year value is 1,52,000 into 100. So changes in percentage is 19.73%. Similarly, find the changes in assets. So non-current assets. Under that, first non-current asset is fixed asset. Fixed asset in the base year 60,000. In current year it is reduces to 54,000. And what is the changes? Changes you'll get in negative because fixed asset value is reduced to 54,000. Initially it was 60,000 in the base year and the difference is 6,000. Now changes in percentage, change in rupees is minus 6,000 divided by 60,000 is the base year value into 100. So change in percentage is minus 10%. And one more non-current asset is investment. Investment in the base year is 50,000 and investment also reduces, that is to 40,000 and changes is minus 10,000. 40,000 minus 50,000 minus 10,000. Change in percentage is minus 10,000 divided by base year value is 50,000 into 100. So changes is minus 20%. Then current assets. Current assets, base year 42,000, current year 88,000. So current assets value increases to 88,000. So difference is 46,000 positive. 88 minus 42,000, it is 46,000. So changes in percentage, 46,000 divided by 42,000 is a base year value into 100. Changes is more than 100%, that is 109.52%. Now find the total. 1,52,000 is the value of assets in the base year. Current year it is 1,82,000 and changes is 30,000. So 30,000 change divided by base year value into 100. So percentage same as liability, that is 19.73 or 74%. Let us see the next problem, number 2. Assets and liabilities of Logan Automobiles as on 31st March 2016 were as follows. Liabilities and assets of 2015 and 16 information given. Shares, 1000 shares of 10 each, 1 lakh and 1 lakh, there is no changes. Profit and loss account 12,000 and 20,000. Profit and loss account increases to 20,000. Debentures 25,000 and 15,000. Debentures reduces to 15,000. Creditors 22,000 and 20,000. Trade creditors reduces to 20,000. Provision for taxation 17,000 and 9,000. Taxation provision reduces to 9,000. Proposed dividend 12,000 and 15,000. Proposed dividend reduces to 15,000. increases to 15,000. And on the asset side, land and buildings, land is 90,000, 84,000, land value reduces to 84,000, buildings 64,000, 60,000, and buildings value also reduces to 60,000. Plant and machinery 6,000 and 5,000, plant and machinery value reduces to 5,000. Furniture 9,000 and 10,000, furniture value increases. 5% government bonds value reduces here. Bonds 6,000 and 4,000, bonds value increases. Stock 1,000 and 2,000, stock value increases. So prepare a comparative balance sheet. We'll go for this. So here is the statement. 2015 is a base year. 2016 is the current year. Changes in rupees and change in percentage. Change divided by base year into 100. First we have to take shareholders fund under equities and liabilities. So capital, share capital. Share capital 1 lakh in the previous year, and in current year it is 1 lakh. So share capital is 1 lakh, 1 lakh. There is no changes in rupees as well as in percentage. Second comes under reserves and surplus, that is profit and loss account. Profit and loss account in the previous year it is 12,000 and current year it is 20,000. So changes is positive 88,000. Change in percentage is 8,000 divided by 12,000 into 100. It is 66.67%. Then non-current liabilities, that is debentures. Debenture in the base year 25,000, current year 15,000, and changes in rupees is minus 10,000. So minus 10,000 divided by 25,000, changes is 40%, minus 40%. Then current liabilities, we can take all the current liabilities together. Creditors, provision for taxation, proposed dividend, together we are taking total of now current liabilities 22,000, 17,000 and 12,000, it is 51,000. And in the current year 20,000, 9,000 and 15,000, 44,000. So changes is negative 7,000. 7,000 divided by 51,000, base year value into 100. Changes is positive. Negative. It is minus 13.72%. Similarly, total 1,88,000 is the total of liabilities in the base year. Current year 1,79,000. So it reduces by 9,000. So 9,000 divided by base year value 1,88,000 into 100. It is 4.78%. Minus 4.78%. Similarly, we can calculate for assets. First, non-current assets. So non-current assets, under that fixed assets. So there are 3 fixed assets here: land and building, and plant and furniture. Fixed assets, we are taking all the fixed assets together: land and building, plant and machinery, and furniture. So total in the previous year 1,69,000 and current year 1,59,000, reduces by 11,000. So reduces by 10,000. 10,000 by 1,69,000. So percentage changes is minus 5.92%. Investments, under that head 2 items are coming, that's government securities and bonds. So total government securities and bonds 18,000, and in the current year also it is 18,000. There is no changes in rupees as well as in percentage. Current assets, under that stock 1,000 in the previous year, current year 2,000. Changes is positive 1,000. So 1,000 by base year value 1,000, 100%. And total of assets in the base year 1,88,000, current year 1,79,000, reduces by 9,000. And percentage change is 9,000 divided by 1,88,000 into 100, 4.78. Negative figure we are getting.